What's up, gang? It is I, Carlton Flowers, your crypto pro.
Yay!
And this morning, we have some rather shocking breaking news. This actually has taken place last night. Last night, we crossed the red line. The line of demarcation, the one that is the last string, the last thing holding Bitcoin on, that I said that if we fall below that line, we're in danger of another very serious drop. Now, when we're looking in here on the 4-hour chart, we notice that we dipped down below it when we got this big, nasty red candle out of nowhere last night. I wasn't expecting that. And then we had another candle close, a doji on the 4-hour here, which usually says, I don't know what I'm going to do and I'm going to reverse. But then we had another 4-hour candle close right there. It's red. And we are in the beginning stage of forming this slight green one. Now the stochastic is bottomed out, and we did have a somewhat of a crossover and then a fake out and then another crossover. So it looks like the stochastic cycle is wanting to swing on around and just come on up like this. But sometimes it doesn't do that, because you can see here it almost crossed over, then it went back down, then it crossed over again. A little bit of indecision there. So it could possibly happen that we curl up and then go back down again. We don't know, but it is possible, and the reason is right there. This is a bearish crossover on the MACD histogram, or I'm sorry, on the MACD oscillators. This set of oscillators down here with the slow line and the fast line, these are slower, have a bigger frequency, or the waves, they're longer. That would be not the frequency, but is that the amplitude? I'm trying to think back to my days of, what is that, trigonometry. And so you've got the frequency is how many waves per time period. So you have a longer frequency, and amplitude, I think, is the height, the travel that you go up and down. Correct me if I'm wrong, math people. Tell me if I'm right about that. But then also down here, we got a red bar printed on the histogram. Those are both bearish signs. So there's a chance that we might see something like this happen. And then this little green tick right here could go red. It's very too early to tell if that little green candle there means that we're going to pop back above this line and then try to form a base and maybe have some consolidation in there. I don't think that's going to happen, but we'll see. Okay, let's jump this up to the one-day chart. And as per the one-day chart, it is still within the preliminary candle that has violated the red dash line. This looks more bearish. And I think overall, we're probably going to see more downward action, because the one-day chart dictates 6 time periods of time travel, of projection of where we're going, as opposed to the 4-hour chart. In other words, it takes 6 4-hour chart candles to make one overall one-day candle. And so the way that this works is this: if you're on the 4-hour chart and you got a red candle, and then you turn around and you got a green candle and a green candle, something like that, and then maybe another green candle, and you think you're moving up, but then you look on the one-day chart and it looks like this, here's what ends up happening. You think you're in an uptrend on the 4-hour, but this is what is really going on. This is what you'll end up seeing, okay? So then you'll get fooled again. Here comes your greens. And so on the 4-hour chart, you have a progression that's going on like this, where you're making lower highs and lower lows, but the overall movement, even though you keep bumping up like this, the overall movement is down. So let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is not enough candles to complete the one day, but you get the picture. So overall, when we look at the action that was formed on this 4-hour chart right here, we have a high point and a low point. And then when you take that high point and that low point, that makes the new candle on the one-day chart. where it would just look like, let's see. Oops, that's an arrow. We want a line. Here's what it would look like. Let's make a candle here. You'd have a body like this, and you would have a little wick because you did have a peak here at that line, and you would have a flat bottom. That's kind of crooked, but you get the picture. This is your one-day candle. So that's why you can't be fooled when you see this green action going on, because it takes 6 time periods. Oh, I made too many. I'm sorry. It would be 6 4-hour candles for one overall one-day candle. And then you have your trading channel that is happening on the 4-hour that produces the one-day chart. So let's clear all of that. And let's just make 6 candles here. So we had that big dip. There's candle number 1. And you could have something like 2 right there. Then you could have 3, 4, maybe came up a little bit, and then you have 2 more, 5 and 6. So those are 6 candles on the 4-hour chart, which would make, here's what it would look like right here. There's the body of it, and then you have a wick that goes above to the peak. This is actually not right because the entrance price would be where the candle body ends, but this bottom part is correct. All right. So then that matches up with, here's that low point right there. And actually, if this is the opening price, it'd be like that. Okay. You see how that works? Now with that little education that you now have, you can look here and know that, all right, this one-day candle we've not closed the second candle below the red dashed line, but then we look at the indicators and we see bearish crossover right there on the stochastic. Not looking good. It's going further. And we have extreme negativity on the histogram with an extreme divergence between the fast line and the slow line on the MACD oscillators, with this big bearish crossover and a very strong downward movement momentum. All right. So in other words, we haven't bottomed out. So this is going to cross over at some point and then start to come up and maybe go down again. But chances are we're going to close another candle below that red dashed line, which means that we could fall into the slip zone where we don't have any candles on the VPVR, any bars out here, which means there's no popular trading price where they really like to buy a lot of stuff, institutions in this area here. We see the volume nodes where we have tons of purchasing that was going on up here in this area and tons down here. And then this is the slip zone. We slip down to this node that sticks out. But notice that there's no bars down here at all. So you want to talk about slip zone. That's going to be one heck of a slip zone right there. All right, let's clear it out. And let's just zip here into the 1 week. And the 1 week looks ugly. It looks worse than the 1 day. We're going way lower, guys. And I'll tell you why. Here's why. First of all, we're below the red dashed line. Second of all, we had the fake out, and then we reversed and had a bearish crossover. See, that's how it goes right there. For all the people who are saying that this was the bottom and they're looking at this crossover right there. See that crossover? And what did it do? It reversed. It was a fake out. Now look, you are pointing steeply down where the slow line and the fast line are diverging. They're going away from each other. They're spreading out with downward momentum. That's bad. Notice how here the slow line is like this, and notice how the fast line is bending over where it's taking a more negative slope, and now it is also diverging away from the slow line. The gap is widening. And look here, we had a light red bar on the histogram and went back to dark red, which says negative momentum. Not good. Not good at all. Now, let's clear this. Let's scrunch this down and look at the volume nodes. Ooh, it's not good. So you see, we are at a peak node right now, right there, below the line. Now we're at that peak node around 19,000. There's a nice one below that at 18. And after that, we got a slip zone. And then we come on down, and the next node sticking out is like 15, you got a chance to catch yourself there. And if that doesn't hold, I don't see what's going to keep it from going all the way down to the point of control on this visible range at about 10,000. Not financial advice, and I'm not saying that will happen. It could reverse at any point, but now you just got to look at all the world conditions and all the negative news. Tether, FUD going on. We have the bug breakout in China, keeping shipping containers in the ports, supply chain crisis, the WAR going on in the UKRAINE, the raising of the rates by the Feds. Inflation is out of control, and they're going to continue to raise rates until they get it into control. We've got the stock market crisis happening. There are way too many things. The liquidity crisis with the wrapped Ethereum. We already had the UST disaster. We have a looming disaster with the Tron stablecoin. There's too much going on right now, guys. And plus the big liquidation that could happen if BTC drops down below 16,000. So that's all of what you need to consider right there. There's all your fundamentals, which basically back up this chart here that shows us that on the 1 week, we gave up on the 50 EMA long ago, and now we're way below the 200 EMA. Unprecedented times, and it's going to get very ugly, uglier than what it is already. So post in the comments what your thoughts are, and please use your head for all the people who say, well, I just can't see BTC going below 20,000. People were saying that all the way up until last week. And then you had my favorite, Steve on Crypto Crew University, who was saying that he thinks the bottom is in. He thinks this is the bottom because of the fact that when you have the death cross, that you've already reached the bottom and it's an after the fact thing. But the negative events going around in the world may make this circumstance different because it doesn't always have to repeat the same way it has in history. This might be the first time we have a death cross and we're nowhere near a bottom. So I think it's a little bit dangerous to be calling for bottoms and reversals at this point. We're just going to have to wait it out. And this is not a time for anybody to be gambling and trading when nothing is guaranteed and when you can lose your pants. You can lose your shorts in this market right now. So you better be careful. Well, that's all I've got, but I would love it if you would like, comment, and subscribe to the Crypto Pro channel. And if you feel so motivated, I would love it if you would send me a super thanks to help me defray the cost of keeping all of this fantastic information coming your way. And I would like to, let's see if I can pull up my list. All right, so we have the following people that I need to give a big thank you for these super thanks. We have my man South North with a super thanks of $5 on the 13th. Jai Dillon, my good friend and neighbor, again on the 13th with the super thanks of $5. Then we've got Middleburg 360 with $1.99 in euro on the 14th. Thank you so much. I appreciate you guys. You'll just never know how much it means to me for your support on the channel. Well, that's all I've got for right now, and stay tuned. I will keep you posted. I'm going on vacation, but I'll have some mobile updates to let you know the action around these very important lines. This is Carlton, and I am out.